Hey guys, welcome back to another episode. Today, we're obviously going to take a closer look at Nvidia. More importantly, we did have three earnings reports that I believe Nvidia investors should kind of consider and kind of learn a little bit more about. The first one we're going to take a closer look at is Microsoft. The next one we're going to look at is Google, and obviously Intel. So, two out of the three are doing good after earnings, and one obviously in the semiconductor space. So, let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, let's just start off with quick price action here. We can see Nvidia definitely had a great day today. The stock was up nearly $30, up 3.7%. Now, we do have after hour reports where the stock is up roughly 2.3% from two major earnings. We had Microsoft and Google. There is a lot of bullish sentiment towards Nvidia's AI solution, and I do believe that's why the stock is up right now. So if we take a closer look, I think Microsoft is dominating. I think both of them are dominating. Microsoft is up roughly 4%. Google is up nearly 11% after hours, sitting at 176. Now, Intel, unfortunately, we're going to see did miss a lot of expectations from investors and from analysts, but the company did share some great news about the AI space. Unfortunately, the stock is down roughly 7.7%. All right, so let's start off with Microsoft. So we saw that Microsoft had a great results, and one of the main reasons is Microsoft's clouding solution was doing good. The main reason Microsoft's clouding solution did so well is because it is taking market share from the other players, Amazon, AWS, and Google Cloud. And one of the main reasons it's able to do that is because the company continues to invest and increase its overall AI solutions. They do mention that Microsoft does offer the latest from Nvidia, AMD, as well as their own first-party chip solution. Microsoft has a nice amount of solutions from AMD. They are getting kind of the MI300X, but it's nowhere near the capacity over Nvidia. And overall, we can see that the numbers of their Azure AI customers continue to grow, and the average spend continues to increase. So this, I do believe, one of the biggest bearish thesis for the AI market is: look, the AI market is not doing anything for businesses; they're not getting any money out of the results. But we can see pretty much from this Microsoft earnings call that, hey, look, not only are they gaining market share from their overall AI because of their AI solutions, their AI customers are also continuing to grow, and the amount of money that they spend also continues to increase. So we can see a nice revenue boost from AI side for Microsoft, which obviously bodes well because I'm pretty sure all the other data center players are also seeing the same thing. So now what's really exciting for Microsoft is they did mention that they expect capital expenditure to increase materially on a sequential basis, driven by cloud and AI infrastructure investments. So obviously, right off the bat, most of that AI investment will most likely go to NVIDIA's GPU solutions. They also mentioned that while they continue to bring capacity online for their AI investments as AI solutions continue to grow, they still have more demand compared to capacity. So again, I do believe that bodes well for the overall AI market and the AI hardware, because it seems like there's still a need for more AI computing power. Now, the final thing from Microsoft that they mention is they do to meet the growing demand for their AI products, they expect fiscal year 2025 capital expenditure to be higher than fiscal year of 2024. But they do kind of give another warning that they say that obviously over the course of the next year, everything is going to depend over the signals that they're seeing about the adoption of their services. So obviously, if we start to see a slowdown in the AI space, then we're going to start to see a slowdown in capital expenditure. So if I was a AI investor, if I was an Nvidia shareholder, which I am, one of my biggest red flags for the company maybe starting to see some weakness is going to be during an earnings call, when we do hear these capital expenditures are starting to slow down for some time due to the lack of adoption. Unfortunately, that will be the time when we're going to see really bad red days following after. And more than likely, we're going to start to probably hear things about it in the grapevine a few weeks before earnings. So definitely stay tuned to this channel as we're going to try to uncover to make sure we don't miss when the kind of market starts to turn around here in the AI space. Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode. Now we're going to take a closer look at Google, and Google also reported earnings. Like we saw, the stock was up nearly 10%. So Google is another cloud service provider, and their Google Cloud continues to grow. Obviously, Google has AI solutions and it's being used for various things like advertisements, like search, and the list goes on and on. Well, very similar to Microsoft, they do mention that in the first quarter, Capex was roughly 12 billion, mainly driven thanks to their investments in technical infrastructure and the largest components for servers, followed by data centers. So right off the bat, Google is saying, hey, look, we're investing a lot of money on AI chips right now. They do mention, looking ahead, they expect quarterly capex throughout the year to be roughly at or above the quarter one levels. So another kind of positive sentiment that Google is going to continue to invest in AI chips and more money here to Nvidia and maybe some of those other AI companies out there that provide outside AI solutions. Now, the last company that we had here is Intel. And Intel, I'll most likely be doing a video on them later this week as we saw the huge price drop. But they do mention that they recently just announced Gaudi 3, and Gaudi 3 is their AI accelerator. And they now expect over 500 million in accelerated revenue in the second half of 2024, with increasing momentum into 2025 based on Gaudi's 3 vastly superior total cost of ownership. And this, in my opinion, should be a wake-up call of how strong NVIDIA's product is. So Gaudi 3 is expected to be a nice, how can I say it, a nice alternative to NVIDIA solutions. It's not only expected to be a nice alternative, it's also supposed to be one that has better total cost of ownership. And you would expect, hey, if you're a product that has this kind of strength, I'm just going to butcher that. I'm pretty sure I'm going to leave that in the video. If you have this kind of strength over NVIDIA solutions, why are you only expecting $500 million in accelerated revenue in the second half of 2024? And that to me shows me two things. One, NVIDIA continues to be the leader here. And even if we continue to see alternative solutions, NVIDIA is going to continue to win in this space. Obviously, companies like Intel and maybe AMD are going to get some very minimal, but some market that can obviously help them grow their revenue, but no one is going to come to the levels of NVIDIA. So if one is looking to invest in Intel or AMD because they believe they're going to see that type of revenue growth like NVIDIA did, I don't think that's ever going to be the case. Obviously, revenue will grow, but it will never grow to the levels that NVIDIA is growing, and is showcasing the true power of NVIDIA's platform chip. It's not just about the chip anymore, it's about everything else that they offer. The second thing it kind of tells me is manufacturing AI chips is hard work, right? Because Intel does mention that they still have some nice demand for this Gaudi 3, but if they're only getting 500 million, it's probably also on their supply line. And like I mentioned, manufacturing AI chips is pretty difficult. And we've seen, for example, AMD's MI300X is one that has crazy, crazy lead times because of the special type of advanced packaging that it uses. So I think in the AI market, no matter how much of an alternative you are, right now, where we sit right now, it does seem like companies would rather invest in the best of the best, and that's going to be NVIDIA. Obviously, this could change, as we do know that Intel in the future is expected to kind of push their, in 2025, they're going to release their first AI GPU, right? Gaudi 3 is just an AI accelerator, but we're going to see Intel finally release an AI GPU, Falcon Shores, in 2025. So again, pretty interesting here. I do believe all these companies did share some great news about the AI space. We heard from Microsoft, we learned from Google that, hey, look, AI demand is strong and they need to continue to invest in infrastructure solutions. Very similar to that same tone that we heard from Meta yesterday. And I'm pretty sure it's going to be the same tone we're going to hear from all the other cloud service providers that are expected to report within the upcoming weeks. The second thing we learned here is that no matter how much of a competitor you might be to NVIDIA right now, obviously things can change, right? Technology evolves. But right now, no matter how much of a alternative solution you are to Nvidia's, you're not going to make any money near the levels of Nvidia. So if all these companies are increasing their capital expenditures and the amount of guidance that Intel gives is pretty low, even the guidance of AMD is pretty low compared to the overall market, then we do know who's going to be getting the bulk of the share here in the market share capital expenditure for this year of 2024? The answer is easy: Nvidia. I do believe that's why Nvidia stock is up a nice amount after earnings. After all these earnings, not its earnings, after all these earnings, the stock is sitting at roughly 846. Obviously, there's a lot of macroeconomics happening all around the world, a lot of fears happening here and there. Stock prices can continue to be volatile, but right now, Nvidia is definitely looking like it's in the right place at the right time. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.